This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And yesterday we saw the market really continue to break down, specifically in the corn. The March contract is a month of interest for us. We broke below recent lows, and it looked like we were going to head and retest those contract lows at 365 3/4. Morale was as low as it could possibly be, but we finally got some headlines here this morning. Good export sales this morning. Private exports really boosted the market. On top of that, we got some tariff talk that added some additional momentum to the market. Tariffs, potentially the December 15th tariffs kicked down the road, and the existing tariffs potentially sliced in half. So that has encouraged broad-based buying in the grain market and a lot of short covering from the funds, which is bringing us up near technical resistance, 380 to 385 for that March contract. That was previous support, now becomes resistance. If we can achieve consecutive closes out above here, I think there's more room to run on the back of short covering. Remember, every rally starts with a short covering rally, so hopefully we can see that confirmed on the technical basis here over the next week. Moving over to the soybean market, soybean also catching a bid off the lows. We filled the gap from December 6th, but now just hovering around that psychologically significant $9 handle. If the bulls can close above here, potentially we see a run towards 907 and 912. This represents a key retracement, the 100 and 200 day moving average. If we close below, I think the sellers step back in. Obviously, this is going to be very headline driven. The headlines can be a double-edged sword. The market giveth and the market taketh away. So keep an eye on what those headlines say with regards to tariffs going into the weekend. Now, wrapping things up with the wheat market, wheat getting a big bid. That Chicago March contract managed to hold 515 to 518, which is the 50-day moving average, as well as the 50% retracement. Now we're hovering against resistance, 530. A closeout above 530 takes us to retest those recent highs near 546. We want to be more on the sell side in the Chicago contract. We still like being long Kansas City, and that support held really well, 420 to 422. The October and November lows held earlier in the week. Got a bid here. If we can hold this bid and close on the highs, I think that encourages momentum buyers to take us to retest the top end of the range near 450. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.